Everyone, welcome to today's episode. We all talk about limited recourse borrowing in SMSF to buy the properties. This is a very hot topic nowadays, and getting more information on this topic, we will have Johnny from SN Tailored Finance joining us today and exploring about the limited recourse borrowing arrangement in self-managed super fund. Welcome, Johnny.
Thank you, Bill. Thank you for having me on this video. Thank you.
Yep. So, Johnny, very hot topic,
Yes.
Borrowing in SMSF.
Yeah.
So, what exactly is SMSF loan?
Yeah, so I guess probably the easiest way to explain it is a SMSF loan is effectively having a loan within your self-managed super fund.
Okay.
A lot of people would have their funds under a normal superannuation fund, industry fund with their employer. Effectively, what they do is they convert it to a self-managed super fund and then effectively purchase the property within that fund. Now, with that, it does come with what they call limited recourse,
Okay.
which means that if that loan defaults, then the credit provider is unable to access the other fund part of the superannuation. So,
Okay, that's great. That way it's very safe in that way you are saving your super. So is it just for residential or commercial, or actually can be residential or commercial?
Yeah, good
properties?
question. So it's very common for a lot of people to purchase it under the residential. A lot of people are looking to purchase for investment purposes. Just remember, when you do purchase a residential property under self-managed super fund, it can only be used for investment, so you can't actually live in the property.
That's right.
Whilst on the flip side, for a commercial property, you can actually make it as an occupied property. So that means if you've got a business that is trading, you can purchase a property under self-managed super fund for your business.
Okay.
And you can actually operate out of that commercial property.
Yeah, that's very good incentive for the businesses actually. Yeah, so if you have the super and you can take all the advantages, tax advantages of the super as well. Yeah, now that's very good. Now, who you think these SMSF loans are actually suitable for?
Yeah, so I think there's probably two sets of customers that are suitable for. So I guess from the residential side of things, it's for people that are, first of all, spoken to an advisor, someone who's really kind of done the calculation for them and kind of done a bit of retirement planning, so they know that this is obviously the right product for them. It's not for everyone. It's also for people that potentially they might be maxed out on their borrowing capacity under their individual name.
Okay.
So they might be looking at purchasing a property on a self-managed super fund as well. So that allows them to purchase another property. And then I think probably the other category of clients are the people that are business owners, that are looking to purchase a commercial property under a self-managed super fund because they want to lease it back to themselves, or even just use it as a property which they will just rent out. As well.
Yeah, sure. No, so that means it opens up a lot of areas for someone who's actually investing in the brick and mortars, because you feel very comfortable when you are investing that way. And as we always say, when it comes to the SMSF, always take a financial advice from a licensed financial advisor before you make any decision if you're not sure about whether it's the right strategy for you or not. So when we are we know that not all the top banks, they don't give the loan to the SMSF. So what are lenders looking for when actually they look for the SMSF loan? Yeah,
good question. So they look at probably the three main components really comes to light is effectively a current super balance, what you've got in there, especially if you're transferring from an industry fund to a self-managed super fund, what is the balance that they're working with. You also look at your contribution over the last 2 years, just to make sure that you have contributed towards your self-managed super fund or to your industry fund. The third part is they also look at the rental yield of the property that you're looking at purchasing. So they're probably the three components that they look at when they determine what is your borrowing capacity, what's the purchase price as well. So, but I will add as well, if you are a self-employed clients, we all know a lot of self-employed business owners that don't actually really contribute money towards a super fund. It's more of a, I guess, an option. So in that instance, the bank, what they look at is they look at a declaration, generally through an account letter, to declare how much they're looking to contribute moving forward. So that is also an option available to your self-employed customers that haven't contributed really for the last 2 years.
More like a low doc type of loans. And I heard that the borrowing capacity outside your super personally doesn't affect the borrowing capacity inside the SMSF. Is it right?
Yeah, that's correct. So the loan under a self-managed super fund is pretty much quarantined on its own. So they don't look at your personal commitments that's under your personal name. So they don't take into account, your credit cards, your personal loans, or any other home loans that you've got going on outside of that, which is really good for, I guess, some clients that potentially have maxed out, but they do have a good balance in their super fund that they can look at potentially still purchase property.
No, that's great actually. That's nice to know that you can actually explore the two sides to get the more benefit from there. So is there a difference in the deposit amount when we are looking into SMSF loan versus when the loan is under your personal name?
Yeah, so good question. So with the self-managed super fund loan, traditionally a lot of people go for basically 20% deposit plus stamps.
Which is very similar.
Which is very similar to purchasing a property under normal under your personal name. Now there are also some banks that will actually lend above 80%, up to 90%.
That's nice.
But it's similar to, I guess, purchasing under your personal name. There is a risk fee that comes with it, which is kind of capitalized on top. So you just kind of need to figure out, is it worth borrowing that extra money? Am I going to get the return that I'm hoping for? Does it outweigh the cost that comes with it? But there are options available for people that might not have that.
And as we all know that property is a long-term investment, especially when it comes to the SMSF, this is not something that you're going to use tomorrow or in a year's time. So yes, if you can borrow more and then actually the expense outweigh your return, then why not? Exactly. And what about the interest rates? Are they similar, higher, or in the SMSF?
So traditionally, because the property's under self-managed super fund loan, it's a higher risk for a lot of the banks for them to facilitate that loan. When I used to work for one of the big four banks, we used to actually do self-managed super fund loans. However, they've stopped doing that just because of the risk that they carry and the compliance that comes with it. So as a result, loans under self-managed super fund is generally a bit higher. We're looking at about 1 to 1.5% higher than your loan under your personal name. And then obviously it is also tiered as well. So if you're lending at 70%, it's going to be lower than if you're borrowing at 80%.
That's right. Which always the case. The more you put, the less the interest rate is. That's right. So bank is always favorable if they have to lend less. So what does SMSF property loan actually, I say other way, to whom the SMSF property loan actually makes sense? Who are the people or the type of clients who should actually go for SMSF loan?
I think probably someone who's has a clear strategy. I think that's very important. Clear strategy as far as where they want to take their retirement, because like you said before, it is a long-term play. You can't really access the equity out of the property, so you can't use the equity within that property to buy another property. So obviously you're locking that in for a very long period. So you want to make sure that, you've done the calculation, you've spoken to an advisor who's kind of giving you the numbers, making sure it all makes sense. I don't think it's for everyone. I think it's for people that have done the numbers. And
and that's I always say is that when you are buying in the SMSF, you need the diversification as well, because if everything is in the property, when it comes to retirement, you need to use the funds as well. So diversification is very important, and that's where you can actually talk to a financial advisor in that case. But property is something that you can only buy in SMSF if you want to use your super, because none of the other super funds, industry or retail, they don't allow you to buy. And you're actually using the leverage to grow your super, which is the biggest benefit that we can have. So now, because as you mentioned, you can't take the equity out. Can you just elaborate that a little bit more? What does that mean?
So basically what it means is that when you initially set up to purchase a property under self-managed super fund, you need to create a bare trust for that super fund, which obviously yourself can definitely help with that. So what that means is that bare trust is exclusively linked to that particular property. And that property and that bare trust is quarantined from everything else, which means it's just on its own. So if you were to purchase another property, you can't actually tap into the one that you've already purchased, because it's isolated, it's quarantined. So effectively it means that any equity that you've seen within that property over the last couple of years, it is withheld within that bare trust. So, which means that if you were to buy a second property on self-managed super fund, it means that you actually need to come up with your own cash.
For the deposit amount. That's right. So that's a big difference between buying a property under personal name, or I would say outside super, versus buying property inside super. So you can't actually do that one. Now, can you refinance it?
Yes, you can most definitely refinance loans under a self-managed super fund. Generally, what you're looking at is if you've seen that there's been a bit of equity growth in your property, and potentially that might take you into a lower tier from a loan to value ratio perspective, it could be something worthwhile to refinance. Though I will put a caveat to that, is that there are fees involved with the refinance that comes with it. So it's about crunching the numbers. Does it make sense for you to pay that fee to get a lower rate? And obviously look at how close to retirement are you?
Yes.
Does it make sense over a long-term period of the time that you've got?
Yes, that's right. And just to mention one point here, again, you can refinance, but you can't refinance to a higher amount to actually utilize that equity. So refinancing means that refinancing the same amount to actually reduce your interest rates or ongoing expenses. That's a good point here. Is there a loan available in SMSF to buy off the plan properties? Okay. So, but can you explain why?
So basically, when it comes to the rules and regulations with it, I guess probably the easiest way to explain properties that you can purchase under self-managed fund is established properties that effectively you can move into immediately. So anything that's off the plan or construction, it's not allowed because there's no kind of end value at the time. So that's why it's very heavily regulated. You don't have the flexibility that you would otherwise have under your personal name.
And that's why we always say is when you are in that stage, always talk to a professional, because just to add to this one, we know that in the under limited recourse borrowing, it's always a single asset that you are buying, and usually the off the plan properties are not a single asset because you are buying the land and the building separately. And as Johnny mentioned, it's in the construction stage and you are actually not buying one asset there. So it needs to be a single asset. Anything else that you like to add to that one for our viewers that they should look into when they are considering SMSF loan?
I think probably the other one is costs, which we haven't covered. I think a lot of clients that I've spoken to, they're really surprised by the cost that comes with it.
Yes.
There's the annual review that needs to be done. There's a lot of, you need to set up a trust, a fair trust, another standard trust as well. Also, the fees that comes with it from purchasing a property, such as doing the valuation. That is something that the client needs to bear, not the bank. There's also these extra fees, application fees as well. If it's a commercial property, they charge it based on normally a percentage of the loan amount. If it's a residential, it's generally a flat fee. Also conveyancing fees as well. Some banks may charge you for the legal settlement from their perspective as well. So you're basically paying the conveyancing fees for your side, but also for their side as well. So there's a lot of fees that kind of add up that people aren't aware of, and it can balloon out a fair bit, especially for people that don't have too much in the self-managed fund. They're just scraping it through to get the loan, and then also they realize they need to come up with
You need to understand the numbers. End of the day, you need to understand what you are going for, how much you've got, and also in future, if the property is not rented, how are you going to cover that one? Because SMSF has the limits on how much can go in. So these are all things that you need to understand, and to understand that one, you always need to talk to the professionals like Johnny. So if you have any questions about the lending part in the SMSF, please talk to Johnny from SN Taylor Finance. All the details are in description. Any questions regarding the SMSF, please feel free to contact us.
Thank you very much.
Thanks, Johnny.
Thank you. Cheers. Thank you.